What's going on, everybody? This is your man, Big Stu, Scott Steward, or Professor Steward, depending on how you know me. Welcome, welcome, welcome. I'm going to be here very briefly. Follow me on Instagram at Professor Stu, and you can feel free to check out my website, geniuslabchicago.com, geniuslabchicago.com. I am the founder of Genius Lab, where we work with young people, primarily 6th through 12th grade, teaching them how business and technology collide, helping them to think about entrepreneurship and where to find careers in the IT space. One of our programs at Genius Lab is our stock market basics class. We roll it out to students. We see about 2,500 students a year. And we also offer this class for adults. And so today I just want to briefly talk about why people make money in the stocks, investing in stocks. And you'll see from my chart here that I have pulled up, and I'm going to enlarge it. The number one reason why people make money investing in stocks is because they're patient. There's a difference between investing and trading, right? Particularly when you think about day trading, right? As investors, I am committed to the long-term investment strategy, right? And my long-term investment is a minimum of 10 years of investing, the buy and hold strategy, right? I have here the Dow Jones Industrial Average, and it's moving right now because it's open. It's actively being traded. The stock market is open right now. Now, what's super important to know is that the New York Stock Exchange opened or was founded in 1792. 1792. Slavery was still happening in 1792. I'm not talking 1892, not 1992, 1792, okay? Since 1792, and I want to see, I'm not gonna be able to show that, but I can go back as far as 1915. So I'm gonna show you that, 1915. If you look at this chart, going back from 1915, and you'll see it, February of 1915. This is looking at the historical stock market activity. And in 1915, the index was at about 1,500. And today, the index, if I go back, is at about 35,000. Right? So from 1915, right? February 1915 is about 1,500. To today, it's about 35,000 is the index. An index is a measurement of growth. Now, you'll see some dips in here, ups and downs. And as we think about investing, I want us to remember patience, number one. But when you're investing and you see a dip, the objective in the dip is to not pull your investments out. It's a game of patience, right? And I'm going to challenge you all right now. We're going to do a 40-year investigation research right now. We're going to look at some stocks and we're going to see just over the last 40 years, how have these stocks performed? Just over the last 40 years. Because again, I'm suggesting the secret is to buy and hold, is to hold on for at least 10 years. But if you can get 20 years or more out of it, I think you'll find investing to be advantageous to you. Now, I asked a group of students this morning, a group of about 30 7th and 8th graders this morning. The question is, do you have 40 years to invest? Put it in the chat. Do you have 40 years to invest? Right? Some students said yes, some students said no. Now, I'm not here to judge, but I'd like to think that I'm helping you to imagine that you do have 40 years to invest. You have 40 years. And I don't know where you are on your personal timeline, but you might be thinking, well, in 40 years, I won't even be here. And I think that's the point. That's part of the point. When we're investing, part of what I'm attempting to do, remember, this thing started in 1792. This is where generational wealth is established and has been established. And what I'm attempting to do is to help my family, my community, establish some generational wealth. I hear some statistics out there saying by 2053, Black folks, African Americans, won't have any wealth. The only way we can fix that is by changing that for ourselves, right? So do you have 40 years to invest? That's the question that you'll have to answer for yourself. I'd like to think so. So let's do the 40-year challenge right now. It's just a research. Stump me. Put in the chat a company that you want me to look at. And I'm going to pull it up and I'm going to see how that stock has performed over the last 40 years. Okay. So we see the current Google charts only go back about 40 years, right? 40 years to approximately the date. And we see this the Dow Jones Industrial Average in March 26 of 1982 was 817.92, right? That's a measurement. It's not a dollar amount. It's a measurement. 817.92, right? So if we go, I don't know where that is on this chart, but that's what we're looking at, okay? So let's type in a company and see what we come up with. And you can throw out a company you want me to look at, and I'll see what comes up. So I'm going to attempt to pull up companies from various industries so there's no bias. One of the first companies I want to look at is Bank of America, BAC. And I want to see, I see that they're up today at about 3%, but I'm really concerned today. And this is just to test the theory. Over the last 40 years, how has this company performed? That's the question. Over the last 40 years, how has this company performed? And we see that over the last 40 years, Bank of America's stock value has risen 2,000%, more than 2,000%. Okay, let's look at another one. Edison. Right? Let's look at Consolidated Edison, New York Stock Exchange. Right? It's down 1% today. I'm not concerned about that. We're talking about over the last 40 years, it's up 896%. Okay. Let's look at Johnson & Johnson, J&J. It's down today. Not concerned about it being down today. But we can see that over the last 40 years, Johnson & Johnson is up 7,000, almost 8,000%. Throw a company that you want me to look at. Let's do the challenge. The question is, do you have 40 years to invest? Pfizer, PFE. How has this stock performed over the last 40 years? Over the last 40 years, Pfizer stock is up over 5,000%. Do you have 40 years to invest? Let's look at General Motors, GM. Over the last 40 years, now I don't even know if we're going to get, because GM did I don't know the proper term for it, like a reset at around 2008, 2009. So they don't have 40 years of data here. But we do see that in the last 10 years, because I said 10 years minimum, and actually it's 12 years, General Motors is up 29%, 10-year minimums. Okay. What company do you want me to look at? I'm going to go Tesla. Let's look at Tesla. Now, I'm sure, 100% sure Tesla doesn't have 40 years of data. I'm not talking about what it is today. Let's look at the max of this company. Now, Tesla's been publicly traded since 2010, 12 years, and it's up 24,000%. in 12 years. In 2010, Tesla stock was $3.84, and today is $946. We're not talking about whether or not you believe it's overrated or not, or whether you believe the values of the company. We're just simply looking at the data. Another company I want to look at is Airbnb. Well, we're not going to find 40 years of data on Airbnb because it's only been traded for less than 18 months. It just came on the market December 11, 2020, and we see that it's still up almost 20% in 18 months, right? Okay, I think you're starting to get the point. Netflix. I don't think we're going to get 40 years of data on Netflix, but let's see. Oh, it's up 3% today. Wow. Let's see what we can get today. And look, it's down. It's down since November 19th, 2021. It was $678.80. And today is $385.82. And I want to talk about that because what you see every time after every seemingly decline, there is an increase, and an increase that at some point exceeds the previous high, right? And these are the prices at the close of the market. It could have been, this stock could have hit $900 in one day, but what was the closing price? I don't want to lose track. So we'll see that in the last, Netflix doesn't have 40 years of data, but Netflix has 20 years of data, and we see that it's up 32,000%, approximately, almost 32,000%. I think, for example, Netflix might be a good buy now because it is down to 385 from its previous high of 678. Right, but that's another strategy call for another day. Let me put in another company. Let's look at, you can tell me a company let's look at Sundial. Now I think this is interesting. All these are companies that I own a little bit of stock in. So it's interesting. Sundial. Today it's up 6%. Do we have 40 years of data on Sundial? We don't. We have less than 2 years of data on Sundial. And in the last 2 years, it's down 94 or 95% almost. It's almost down, to zero from when it started. It started it closed the first day of closing August 2nd, 2019. It closed at $10.45. Today it's at 56 cents. But I'm doubling down because I have a 10-year, 20-year window. And I'd love to see, based on what we've seen in the past, where would this stock be in the next 40 years? For example, if we just go back and look at Netflix. Let's look at Netflix. I tell you, I love telling the story of Netflix. Sound like my son. And I said, I love telling. If you look back here, it's $1.21 in 2002, and it dropped to 87 cents. It doesn't go back up above $1.21 until a year later. All right, 2003, it goes back up above $1.21. Right, and then it even drops even more. Like, it stays in that range. And so if you bought it at, if you got this stock at $1.21, and then it goes up, you see it's 3 years in, it goes up to $5. You may be thinking, oh man, this thing is popped. You bought it in 2002, right? And then here we are in 2011, and it's at $42. You may be thinking, oh man, but that's only 9 years. Where is it in 10 years? Because that's the 10-year minimum. So June 14th, 2012 is what we're looking for. June 14th, 2002 is 99 cents. June 14th, 2012 is what I want. Let's see if I can get June 14th exact, 2012. June 14th, 2012. June 15th. June 15th is $9.40. That's 10 years. That's an increase. But if you stayed on for that 20 years, even today, $1.21, and even with the decline from October, you're still up 31,000%. So I love telling this story. I love telling this story. Let's look at one more. Let's look at a couple more. That's Sundial. So we looked at Sundial, right? And let's go back and let's analyze Sundial, because that's one I'm holding Sundial now. And it's up. It's having a great day today. I should have bought some more. I think I did buy some more. I think I bought it at 53 cents. I think I bought it and went in and bought like 100 shares at 53 cents. Now you see that's only like $5, right? That's okay. It's okay. You got to get in where you fit in. Get in somewhere. You only invest what you are willing to lose. Don't be out here trying to invest your life savings. That's not what this game is. Invest what you can afford. Invest what you are willing to lose. Okay? Use that money. So you cut back on your Uber Eats. You cut back on your Hennessy, or you cut back on your disbelief. I mean, buy disbelief. Disbelief ain't paid for this ad, but you buy your disbelief. But you cut back and you say put some of that money towards your investments. Okay, so it's down. We don't have 40 years of data. We're looking at 40 years of data for the companies. Stock market in New York Stock Exchange was founded in 1792. We were still slaves. Okay, so I'm not concerned that it's down. Even if I bought it at $10.45 August 2nd when it closed and it's down to 57 cents today, I'm not mad, because I don't have enough. Let me see what this thing is in 10 years. Let me see where it is in 20 years. Let's go on to the next company. GameStop was the talk of the town a year ago, 2 years ago. I'm not concerned about what it is today. We're looking at the 40 years. Do we have 40 years of GameStop? We don't. We have 20 years of GameStop, and we see that it's up almost 1,000%. It was, close to $10 in March 22nd, and today is close to 10. I mean, today it's $106. That's almost 1,000%, right? So this is what we're talking about. So the first rule of investing is be patient, yo. You gotta be patient with the money. This ain't that pop off. It's a slow, and in the name of my, in the words of my man John Rogers, Ariel Capital Investments, slow and steady wins the race. Do we have 40 years of McDonald's? We do. And McDonald's stock is up 29,000%. 29,000% in 40 years. You got it at 85 cents a share in 82. I mean, hey, if I got 100 shares of that in 82, that's $85 gives me 100 shares in 1982. That's $23,000 today. That's $23,000 today. You see what I'm saying? If I got 10 shares in 1982, I spent $8.50. That's $2,300 today. 29,000%. Let's look at Nike. Where is it? Do we have 40 years of data on Nike? I don't care. It's up today. The market is popping today, and today ain't the best day to buy right now. Don't buy because it's popping today. You don't buy when it's up. You buy when it's low. 40 years of data on Nike. Look at that. It's up 60,000, almost 60,000%. And for those of you who struggled in math like I did in middle school and high school, yes, it's possible for something to be up more than 100%. So if it's up 100%, it doubled. If it's up 200%, it doubled. 300% is double. This is double 59 times. This stock price is double. So yeah, the trick is investing when the trick is investing for the long term. Be patient and invest what you are willing to lose. Hey, if you want to learn more, hit me up at Professor Stu. I'm always having stock market basic classes for adults. This is a little taste of what we're talking about, right? Of course, I can get into looking at the charts, right? I can get into looking at the charts where we're talking about what these numbers mean. These are the closing prices. You see these numbers changing? 596, 540, 1326. Those were the closing prices. Of course, we want to look at, yesterday, this chart over here is looking at, yes, I use Google Finance. Super clean to me. Yesterday, this stock price closed, Nike closed at let's look at it. It's Nike we're talking about. Yesterday, Nike closed at $130.02. Currently, right now, just right now, today, the stock price is up $5.65 or 4.34%, or $5.84 or 82 cents or 80 cents now compared to what it closed at yesterday. Yesterday, the stock price got as high as $139. Yesterday, the stock price got as low as $134.39. In the last year, Nike stock has been up to $179.10. It's been as low as $116.75. Okay, and I think these aren't closings. These are just the highs and lows that they've had of touched in the last year. We know that Nike is worth $214 billion, $214 billion, $83 million. It's a $214 billion company. How do we know? Because we multiply the stock price by the number of outstanding shares, like what's out there, right? You'll get an approximate based on that. If you do, the volume is the number of shares, the average number of shares. I just had it. The volume is the average number of shares that this stock is traded a day. So it's about 7.6 million shares a day times the current stock price will give you that valuation, that market cap, $214 billion. The price earnings ratio, will tell you the PE ratio is your stock price. The ratio current share price of the trailing 12 months earnings per share. This signals if the price is high or low compared to other stocks, and it's other stocks within the sector, the industry. Okay. The dividend yield. Nike pays 0.9% on its stock price as a dividend. A dividend is what some companies choose to pay their shareholders, a percentage of the profits. So that's what we're looking at here. That's what we're looking at. All right. That's all I got for you today. I just wanted to talk to you about a trick. It's not even really a trick. It's just the truth. And the truth of the matter is, be patient. Think about the long term. Today, the stock price, all the stock prices are up today. You got to sit back today. Fall back today. Fall back. Don't invest because everything is up today. You want to buy low. You want to buy when the stock prices are down. And if you have investments, I get people that run into me, man, my stock, and I'm losing money on my stock price. It's down today. Don't worry about it. What's it been doing over the last 10 years? 10 years? Yeah, if you're not investing in that 10-year, 20-year or longer range, you're a trader. You're a day trader. And actually, nothing. I don't have anything against day traders. I just don't have the capacity to day trade. It's not my thing. I'm not a day trader, right? I'm a lot more methodical. I'm a lot more laid back in my style. So everything I do, I try to do it with ease. So I like investing. I like buying and holding. I like letting it sit. I like putting it up and then check on it later. You know what I mean? I prefer to cook my meals in the crock pot. You know what I'm saying? I'd rather turn on the oven than put it in the microwave. You know what I'm saying? So that's what I do. That's my strategy. And it's a strategy that the industry, the stock industry, it's a strategy. If you're looking at here, it's a strategy that proves that if you're just a patient you'll see your value of your investments increase over time. So that's what it is. You already know what it is. Catch up with me on Instagram at Professor Stu. Catch up with me right here on my YouTube channel. Subscribe to my YouTube channel. Like my YouTube channel. Share my YouTube channel. I'm new to Twitch. Thank you for having me on Twitch. Facebook, you already know what it is right here, right now. This is your man, Big Stu. Until next time, all right? Peace.